Hello and good afternoon. Welcome to the first of this week's webinars from Thomas Westcott. This one is exploring some of the options for funding development opportunities. My name is Patrick Tigwell. I'm a general practice partner with the firm, and I have the pleasure of being your host for this afternoon. I had said on the 13th of May, when we had our last webinar, that the pace of our webinars had slowed, but like London buses, they come along at once, and we've got one today, this one, and obviously we've got another one tomorrow on accountancy careers. So if that sort of floats your boat as well, then you still can book, and I'll mention that later. But on to today's webinar. And for those of you suffering because line of duty is finished, we have more acronyms than you can shake a stick at. To start with, I'm delighted to welcome Jenny Milligan from the University of Plymouth, and she is a Senior Innovation Funding Manager, possibly an SIFM. She's also a Norwich City fan, so I'm hoping her presentation can really cut the mustard. Anyway, in our practice session, actually, Jenny was explaining that she was very much trying to engage with the business community and not reside in an IT ivory tower. And she'll explain about KTPs, or Knowledge Transfer Partnerships. And from the discussions we've had previously, it looks like it's a great initiative. But next up after Jenny, we'll have my North Devon partner colleague, Mark, who's hot because he's head of tax. And he'll be explaining the R&D reliefs and explaining that HMRC are taking a more project-based approach to it these days. And I would confirm that he, as far as I know anyway, he's not a member of the OCG, or is he? And additionally, I'd like to thank Alex Eastland from our marketing team for her efforts today. She's recording this webinar and will be mailing it out to everybody after the event. The plan is obviously to have the two presentations. We'll have questions after each one, and then a few questions at the end. If you haven't asked a question yet, when you registered, you still can on the Q&A button down there. And as we go along, that's fine. Please post anon if you'd like to remain anonymous. But if you've finished the webinar and you still like to ask a question, you still can at events@thomaswestcott.co.uk. We will attend to every question. If we can't get to it on the call or it's a bit too detailed to give a proper answer, we will attend to it afterwards. So without further ado, I'll hand over to Jenny for her presentation, and she's going to share some slides with us, hopefully.
Can you see that?
Perfect.
Brilliant.
On. Yeah.
Okay, thank you very much, Patrick. And I didn't know before this that Patrick was quite such a wit, and now I feel that I've got a really hard act to follow because my presentation is not going to be that funny. So thanks, Patrick. So yeah, good afternoon, everybody, and thank you very much to Thomas Westcott for giving me the opportunity to talk to you today and to talk to you about knowledge transfer partnerships. So as Patrick said, I'm Jenny Milligan, Senior Innovation Funding Manager at the University of Plymouth. And my team, the Innovation Funding team, our job really is to try and get the amazing stuff we've got in the university out of the university, where it can actually support our businesses, our communities, environmental projects. So it's really about finding those opportunities where we can apply what we've got within our institution outside, and knowledge transfer partnerships are a really great way of doing that, and that's what I'm going to talk about today. So what I'm going to cover is what a knowledge transfer partnership is, why you should do a KTP as a business, why would it be of interest to you? If you do it, what does that actually mean in practice? And actually, what difference does it make in a couple of case studies? And the reason we've decided to talk about knowledge transfer partnerships today is because actually, you know, universities in general and our university as well has a huge portfolio of subject areas, of resources, of equipment, of facilities. There's a myriad of funding streams out there, and actually it's almost impossible to get a feel for how we can work with businesses in a way that makes sense So actually we thought picking just one particular programme, which is the KTP programme, might be a really good way to start that sort of dialogue on how the university could maybe work with you and help with you. And actually you can help us to inform our curriculum, to inform the students we're teaching. So we're actually producing the talent of the future that's going to meet the skills needs of the businesses that we've got in the region. So what is a KTP? I think the first thing to say about a KTP is, unlike almost any other funding stream that I can think of, this has remained almost unchanged for 45 years. So it must work. You know, things flip-flop from government to government, administration to administration, but actually KTPs have been there for decades. So it must be a good programme and it must work. And the crux of a KTP is it's a genuine three-way partnership between the business, between the university, and a recent graduate or postgraduate who's called an associate. And without that equal partnership, it won't work. And we really do try and make it an equal partnership. And at the heart of a KTP is it's about a business having a strategic need or challenge that you can't address on your own. You need some additional support. It's not a short-term thing. It's not, I can buy in a bit of consultancy and in a couple of months we can sort the problem out. This is something where actually it is a big strategic need, a big strategic opportunity. It's long-term. The minimum time for a KTP is 12 months. The maximum is 3 years. The average is round about 2 years. And it's where you think, actually, I've got an R&D need or a technical need. I need to get some support. And that's where the university can wrap its facilities and its expertise around you and help you come up with that solution that will drive your business through to the next level. So if you're a business, you're probably thinking, well, I do innovation all the time. We have to innovate to remain current, to remain profitable, to keep going. And we know you do that. And as I said, that's why the KTP is looking at something that is that long-term strategic aim where you do need that support. And there is some really good business reasons why KTPs are worth considering. The first thing is, and this isn't a business reason, it's just a nice reason, it's really hard to get funding for anything, but a good KTP has a really high success rate. 75% of KTP applications are funded. And at the university, our success rate is closer to 100%. So it's a, you know, if you've got a good KTP idea, we've got a really good chance of getting the funding for it. And KTPs have a real positive impact on the bottom line for the businesses, both short term and medium term. You can see from the slide there that, you know, this information has been collected over years and years and years. So it's not just 6 months. This has been collected over many, many, many years. That there's a 60,000 increase in pre-tax profits during the project itself, increasing to 600,000 once the project finishes. And then because you've developed a new product, a new process, a new quality control mechanism, whatever it is, quite often that will open up new markets, new export markets. And again, the statistics show that, you know, businesses that engage in a successful KTP will increase their exports by round about £650,000 a year. And, you know, these are big sums, big money. And the final reason that I put on the slide as to why KTPs are important is that we understand that good quality staff absolutely are pivotal to business success, as they are to our own success. And well over 50% of businesses will keep their KTP associate on because they know they can do the job, they know they're a good cultural fit, and it also means you don't have to go through the pain of recruiting another person to pick up the role that KTP associate was doing. So, you know, the evidence is that for businesses that do engage in KTPs, there are really, really positive outcomes for them in terms of bottom line, increased markets, new products, new processes, and, you know, good staff that you've then got within the organisation. So lots and lots of reasons why a KTP is a good thing to do, but I know that your busy as businesses, and I know that grant funding can be a bit of a pain. So how do we develop the idea? How can we work with you to make this a success? As I said in my previous slide, the single most important thing is the idea that you've got, the opportunity that you've identified, the challenge that you've identified. You know, what is it that you are looking to embed within your company, that you're looking to develop, that you're looking to sell? You know, once you've got that idea, it's much easier then to develop the KTP ideas, the KTP project and proposals with us. There has to be a benefit to you, there has to be a benefit to us, and that sort of flows through the KTP process. I think it's important to say it's not free. It is a grant programme. The government will put in 67%, you put in 33%, and that works out at about £30,000. And that might sound like a lot, or that might not sound like a lot. I'm not quite sure the sort of where you would see that £30,000 for your own business needs. But I think the way I would look at it is, if you have spotted this opportunity in the market, or the opportunity for your business, and you think there's a good growth potential there, you might well be looking to recruit somebody to exploit that opportunity anyway. And if you're looking to recruit somebody, £30,000 a year doesn't sound unreasonable. But in addition to just that associate, you get the academic support from the university, you get access to our facilities and our equipment, you get the sort of management support that sits with the KTP to make it a success. You know, we work with you to take the strain off this process. We work with you and the academics to develop the idea, to identify the research needs. We work directly with Innovate UK to make sure they're happy with the project as it's going in, so we have the highest chances of success. So there is some work, but we do as much as we physically can to take the strain off of it for you. If we are then successful, we've written our lovely proposal, it's gone in, Innovate UK have said, yeah, we love the idea, we can go ahead with that. What does it mean in terms of the day-to-day management of this project and the time it's going to take for you and your company? Are you going to think, actually, this is too much work, we don't really want to be involved? And we really want to reassure you that that's not going to be the case. If the funding is awarded, the most important step that you will find as a business is to get the right associate in place. You'll have met our academics, you'll have the academic team, you'll know who they are, that will all be agreed and in place. The research side of it will be sorted out. Getting the right associate that's going to be the fit for your company will be really important. And that is a joint exercise between us and you. You will write the job description to make sure that what that associate is doing meets your needs. But we'll do the advertising of it, we'll do the recruitment of it, we'll interview the applicants with you, but you will have that say in terms of who you want. Another thing that's a little bit different about the KTPs is, although the associate is absolutely your member of staff, they're embedded in your company, they work with you day in, day out, they're actually employed by us. So we do all the HR work, we do all the strain on that, we do all the payroll work. So you get the benefit of the associate, but we do all the HR stuff that sits behind it. And obviously, as soon as the programme is operational and the project is running and you're starting to develop this new sort of R&D idea, that's when you will really start to benefit from the academics that you have, you're working with on this project. And that, that could be people working with, new artificial intelligence systems. It might be working with our material designers. It might be working with our composites academics. It might be working with our marine engineers. Whatever it is, you will then have access to that academic expertise that will really help you address this challenge and this opportunity that you've identified. There's also a training budget for the associate, and that means as you're going through this project, if you find that there are some skills gaps that they might have, that can all get picked up as part of the core costs. So for if example, you've got an associate in working around artificial intelligence, and there's some sort of new learning coming out, and you need to send them off on a course for 3 weeks in Oxford and it costs £3,000, that's all covered. So you can make sure that your associate keeps absolutely up to date and they've got the skills that they need to sort of drive your business forward. And because the KT programme is so well developed and so well established, there are really slick sort of management processes in place, which means that we work with you hand in glove right the way through to make sure that the project will deliver the outcome that you're hoping it will. And I think, you know, we're with you, my team is with you from the very, you know, from the concept of the idea through to the development of the application, through to the recruitment of the associate, through to the management of the programme, right the way through to the point that that KTP either is taken on by you or they leave the project at the end of the project period. So you'll have that continuity right the way through the process. So you'll always know that there's somebody you can talk to about it. But you don't need to just take my word for it. KTPs really do work, and businesses that have undertaken KTPs can have the most fantastic results. And I've just picked 3 case studies for you to have a quick read of, just to show the sort of scope of the sort of type of things that KTPs can deliver in terms of the subject area, in terms of the outputs, and they really can provide a benefit to any business if you've got that research and innovation need. So just quickly, you know, Red Paddle are a company in Cornwall, and they worked with us around process design and product design. They had access to our advanced testing materials facilities, and had a great outcome. Blue Fruit Software, another Cornish company actually, and again, they had a KTP working on the software for medical devices, and you can see there that as a result of the KTP, their own sort of market grew from 10% to 60%, and that was directly on the back of the work that the KTP delivered. And the final one is Langage Farm, which is a company probably you've all heard of, a local dairy and food processing factory, and they did a really interesting KTP with our electron microscopy centre, where they were trying to develop a new product, but it was they couldn't get the texture right. So working with the KTP and our laboratory, they could get down to the nano level of this product, and over the course of the KTP, they perfected the way they were producing this particular product, and it's now on sale in multiple supermarkets across the country. So again, a fantastic output. So, you know, companies that do KTPs will almost always think that they're positive. You know, if you've got that good idea, it can help drive that idea, that process through to the next level. And actually, you get quite a lot of repeat, you know, business. You'll get companies coming back to do another KTP with their next idea. So they really, really do work. So it's a bit of a canter through because it was only 10 minutes. But I think, you know, in summary, it is a tried and tested method. It is a way that the university can work with businesses where we can make a difference to what you're trying to do. There are demonstrable business benefits. You know, new products, new services, new markets, improved bottom lines, you know, quality staff on your books. And as I've said, we're there to support you right the way through from that initial idea, 3 years hence to the end. You'll have one person working with you right the way through. People like it, they do work. And we are here to help. I can remember one of our academics at a conference once said the University of Plymouth wants to be a useful university, and that really is true. We want to teach great students and we want to be a good research organisation, but we want to be a useful organisation. We want to be able to work with our businesses and our communities to make a difference. So if you've got any kernels of ideas that you think you might want to develop into a KTP, or actually anything else that you'd like to talk to us about, whether that's around student projects, commercial R&D, access to facilities, drop us a line. We will do everything we can to help you. Dave and Jana are the two KTP managers, so anything specifically about KTPs, drop Dave and Jana a line. Anything else, drop me or Enterprise Solutions a line. Thank you very much for listening. I know it was a bit of a canter through. I'm sure the slides will be shared at the end, will they, Patrick?
Yeah, that's fine. We can sort of email the slides out to...
Yeah, so you'll have all my details there, and I'm happy to take questions now or to pick them up at the end, whatever's going to work best.
Yeah, thanks, Jenny. Yes, if you've got questions, obviously just put them in the Q&A section there. Just a couple of questions, though. Obviously, you mentioned a couple of Cornish companies and everything. Is what you do at the University of Plymouth geographically based to that part of the world, or would you cover, you know, if you had an applicant from, say, my neck of the woods in Exeter, perhaps?
Oh no, it's definitely not. It's just those two happen to be in Cornwall, Langage is in Devon. The rule of thumb with a KTP is it needs to be somewhere, you know, for KTPs to work really well, where we can get to the business easily within a day. So, you know, technically we could do a KTP with a company in London or Yorkshire, but because there is a requirement for the academic to meet the business on a regular basis, it works best where it's in a local area. So for us, anything in Cornwall, Devon, Dorset, Somerset works fine. I mean, we had a KTP in Poole in Dorset last year, and you know, that worked absolutely fine. So yeah, geographically we like to be able to get to the business easily if we can, but it doesn't you know, even then we do have KTPs that are outside region.
And do you kind of I know, looking on the websites and everything, it's obviously a national initiative, isn't it? So I saw there was a lady at Exeter University doing the same sort of thing, so would it be a case, would you liaise with that lady if you had a business come to you and say, well, look, Jenny, we want to do this, but you felt actually the University of Plymouth was really the best person, organisation to help, so you'd sort of relay it on?
Yeah, absolutely. There's I mean, the KTP network across the universities it's a really well-established network, and they meet regularly, and absolutely if we couldn't meet that business need, we would refer them on to another university partner. And a colleague of mine has just emailed me and said Red Paddler in Devon, so there we are, got my homework wrong there. So 2 in Devon, 1 in Cornwall.
Yeah, definitely a case of cream on first, I think, on this webinar.
Yes, definitely.
Just one final question before we move on to Mark. So what happens then if it doesn't go well? You know, if for whatever reason the company decides not to follow through on the KTP, or if the associate, just the initial interviews doesn't really gel. Yeah. Do you just step in and sort of sort it all out, or? Yeah,
we obviously we will, you know, sometimes there will be some issues, particularly between the associate and the business, and you know, we will broker that, and we will try and sort of help overcome whatever issues there are. There are times when it just doesn't work for whatever reason, and we either will finish the KTP early, or we will, the associate will leave, and then we'll work with the company to recruit another associate and pick it up and carry it on. But no, you're not sort of signing away in blood that you've got to get right the way through to the end, or you know, there's going to be trouble. You know, most of them will finish absolutely fine. But yeah, where there are issues, we'll work with the company and the associate to try and to sort of facilitate a satisfactory solutions, whatever the problem is. But if it doesn't work for whatever reason, the KTP can finish or restart with a new person.
All right, that's awesome. Thanks very much for the time being. We'll move on now to Mark for his R&D canter through with, I think, a few more slides than Jenny managed.
So just a few more. Thanks, Patrick. Thanks for that, Jenny. And as Patrick says, my name is Mark Tibbert. I'm a tax partner with Thomas Westcott. I'm just going to run through, probably a little bit quicker than Jenny's done there, a recap of what research and development tax relief is, how it can help companies, and effectively how it could be another way of helping fund some of the development you might be looking to do in-house, alongside as well a KTP. So as well as the KTP providing some funding, R&D could cover even more of the cost for you. So in terms of what are the reliefs, it's broken down into two types of scheme. There's an SME scheme, and what used to be called a large scheme now goes by the name RDEC. And although it's thought of as a large scheme, it can apply to an SME. So first of all, you need to decide which scheme you're falling into. And as a general rule, for an SME, you're at any company that has less than 500 employees and either has less than 100 million euros turnover or less than 86 million euros total assets. So although we're thinking of it as an SME and it's described as an SME, it's very large businesses would still meet that definition. The one area to watch is just if you're in a group or you have got institutional investors, etc., involved in you, just to make sure that there's nothing that else you have to bring in when considering that, rather than just looking at the entity itself making the R&D claim. And the reason why the split there between SME or a large is important is the type of relief you can claim. So generally, most businesses will always be claiming under the SME relief, and it is valuable relief in that it essentially uplifts all your qualifying costs, which I'll come on to later, to 230%. So effectively, for every £100 you spend on qualifying R&D, you get £230 to offset against your taxable income, which is great news for a profitable business. It reduces the amount of tax you have to pay. And for a loss-making company, or if with that uplifted cost it pushes you into a loss for tax purposes, you can surrender that loss for a 14.5% tax credit. So it can help bring money in to help fund further development, especially in startup businesses and high development costs. The one change that's been brought in from for any accounting period commencing after the 1st of April 2021 is there's going to be a cap where you're looking to claim that 14.5% tax credit. That cap is there to try and prevent some of the fraud that HMRC believe has been happening within R&D and limit it to genuine R&D claims. The cap being £20,000 plus 3 times your total PAYE national insurance payments. That's not just what is spent on R&D, but your total payroll. So hope for smaller claims, it potentially won't make any difference. It's there more to restrict claims where you're not actually employing people, and effectively you as an entity are subcontracting out, say, an awful lot of your R&D activities. So how does the large relief, also known as an RDEC claim, differ? It effectively doesn't give you the uplifting cost. The way it works is as a credit against your tax liability. And effectively it says whatever your R&D qualifying costs are, you get a 13% tax credit. That 13% applies for any costs incurred after the 1st of April 2020. Prior to that, it was 12%. And the way the relief works is it says, well, that 13% is added in as onto your taxable income. You work out your tax liability on that, and then you get relief for the 13%. So with a 19% tax rate, it works out at roughly an 11% credit. And it makes no difference whether you're profitable or loss-making. That 11% credit either reduces your tax liability or it becomes a repayable tax credit to you. It has a similar restriction to the SME one, although effectively it's just restricted by the total spend on workers effectively. So your total PAYE and national insurance liability. Let's say the RDEC claim is primarily there for large businesses, i.e. ones that don't meet the SME definition. However, it can apply to SMEs where their work is subsidised or they receive certain types of grants. So sort of moving through some of the key areas and what you need to look at, then for what types of costs can you claim to get that uplift on? The primary one is effectively salary costs, and that can be individuals involved directly on R&D, but equally it can apply to those indirectly involved in R&D. So someone that might be indirectly is if you've got an admin member of staff that's writing up the reports to support your R&D activity, you can bring those in to any claim, as well as those people actually undertaking the research and development process. And it's all salary cost, so it's their gross pay, the employer's pension, employer's national insurance, all of that qualifies, and effectively you look at it on a project by project basis, and either you've got the details of how much time compared to their total working time individuals have spent on R&D, or you make a reasonable assessment. The second area of cost that you can be looking to claim is where you subcontract out the R&D. So for example, if you're undertaking a specific project in-house, you've got the staff to do the majority of the work, but you need say certain materials testing, then you might pay someone, say the university or another business, to actually test those materials as part of your development process. That cost is a qualifying cost. It is though restricted to 65% of whatever you spend. So for example, if you spent 10 grand on subcontracted R&D, the uplift would only apply to 6.5 grand. The one caveat to that is if you're making an RDEC claim, subcontracted costs aren't allowable. The other big area would be consumable costs, especially if you're sort of manufacturing a new product. And any materials that go into prototypes, testing, etc. All of those can be included within a claim and qualify for the uplift. The one restriction, again, would be if you create a prototype, prove it works, and then go on to sell that actual original prototype, then you wouldn't be able to claim for the materials incorporated into that product. That's a restriction that was brought in a couple of years ago. And alongside that, one of the costs that falls into consumable costs, as it were, is any utility costs, power, water, fuel, etc., that are used up as part of the R&D process. If you've got a dedicated R&D facility, that's quite easy. If it's just part of an overall office space, manufacturing site, etc., then you, again, as with salary costs, you bring in a proportion of those costs based on a reasonable assumption. And HMRC recognising that a lot of new development involves computer software for modelling, etc. They've brought that in as another category, so that if you spend money on specific software to help during the R&D process, then you can claim that as an allowable cost. If it's got dual purpose, there's some general work and some very specific R&D, again, you make it as a proportional cost. So they're the costs that sort of qualify. What costs specifically don't qualify? Anything that's a capital cost, you can't claim the uplift on. What you do have though is if it's an item of equipment that you're using, then capital allowances would be due. And there are specific 100% first year allowances on capital equipment, slightly less relevant at the moment, given that there's currently a 130% super deduction. But it's worth bearing in mind if you didn't qualify for any other enhanced relief, then you can get 100% first year allowance on equipment. And one that's often overlooked is if you've got a specific building for R&D, or you go out and purchase that building or build it from scratch, normally you wouldn't get any tax relief on buildings, but for R&D you can get 100% first year allowances on R&D buildings. If it's only partly used for R&D, then again, as with the revenue costs, you can claim a proportion of that building cost. The one asset that is always excluded is land. So if you buy a building, you have to apportion out the land. One cost that I've often seen included in error in claims is if you're looking to register patents or trademarks, any cost associated with that in terms of registering or maintaining them are not qualifying costs for R&D. Don't intend to go into any detail, but one thing that may be worth looking at if you've got patents or trademarks registered is whether a patent box election could be worthwhile. That effectively would reduce the main rate of corporation tax you pay on that income from the headline rate of 19%. And then grants and subsidies can also have quite a big impact on the nature of the claim. So if you receive state aid support, for example, then that means you can't qualify for any R&D relief on those projects and essentially taint the entire project. If you received any other form of grant support, then effectively where you're receiving the grant support, any costs not covered by that grant support would qualify for the SME scheme if you're an SME claimant. The other costs potentially would then qualify for an RDEC claim. Equally, if the costs are subsidised, and this is an area where the revenue are looking more closely at now. Within the legislation, subsidised is very broadly defined, and effectively, as an example, if you're a manufacturing business and a client comes to you asking you to design a new bit of kit for them, you may think that you're undertaking the R&D, but if you receive any payment from them towards that, then the project itself is subsidised, and it would immediately take you out of the SME scheme and put you into the RDEC scheme. It's therefore very careful if you're doing work for other companies on projects to look carefully at the contracts to decide whether it is subsidised or not, or whether you can early on make it very clear that the work you're doing around R&D is not subsidised and any payment you're receiving is nothing to do with the R&D. Thinking then around the projects, and this is one of the key areas that needs to be established, is you need to establish what project you're doing. So if you're going for, say, a KTP funding, as Jenny said earlier, you need to very, very clearly define what it is that you're looking to do and why you'd be using the KTP to do it. The same with R&D, you need to have a clear idea of what the project is. And it's very important to think that it's not just blue sky thinking when you're thinking of R&D. Effectively, R&D can cover a diverse range of activities. And essentially, it's anything that is seeking to achieve an appreciable improvement to any existing process, device, material, product or service. So it could be something internal to you, could be something that you're looking to develop from scratch or take to another level. So a Mark II version bit of software, for example. And in general, as I've put on the screen there, there's 4 questions you need to be able to ask yourself on those projects. And it's what the revenue would be looking for and looking to have answered with any report that goes to them. First of all, which isn't written there, is that you've got a clear project. And then it's what is that project seeking to do from a scientific or technological advancement? Secondly, essentially, what are the uncertainties involved in trying to achieve that? So it can't be that you know exactly what you're doing from the outset, although you might be achieving in advance. If you know how you're going to do it, then it wouldn't fall within R&D. Third, you need to be able to say, well, how have you sought to address those uncertainties? What processes have you overcome? And it could be that as you've gone through the project, you've realised you can't succeed and the project fails. Just because the project fails doesn't mean you can't claim R&D. You can still claim for any aborted or failed projects within an R&D claim. And the fourth one that is always slightly tricky to answer is why was the knowledge not capable of being sought by a readily deducible competent professional? So it's looking within your field that you're doing the R&D. If you as company A have done it and you didn't think it was possible, if I'd gone to company B, would they have said, well, yes, you can just do it like this? Or would they have approached it in exactly the same way and come to the same conclusion? HMRC have a horrible tendency of just doing Google searches to answer that question. So just to put some numbers on it to sort of demonstrate how valuable R&D relief can be to a business. I've got 3 examples here just working through. So first one, an SME claimant, taxable profit of 100,000, has incurred salary costs of 30,000 on R&D, subcontracted costs of 10,000, and consumable utility costs of 4,000. So effectively, they've incurred total qualifying R&D costs there with the 65% restriction on subcontract costs of 40,500. That 40,500 gets uplifted by the 230%, so it becomes 93,150. So it reduces your taxable profit from 100,000 down to 47,350, effectively saving you tax of about 10 grand. So equivalent to about a 24% tax saving there, 24-25% tax saving. So a very valuable relief, especially if you consider that the salary cost may have been partly funded through a KTP and may have originally cost you 60,000. You've got a huge saving there for doing a project that you'd been looking to do anyway. So taking that SME example and looking at it slightly differently, if instead of £100,000 profit, you'd got £100,000 loss, same costs, that £100,000 loss becomes 152,650 as a taxable loss. On the £100,000 loss, you'd have got no tax relief. It's just a loss that would have been carried forward. You're able to surrender the loss, and the loss you can surrender is the lower of the enhanced tax relief or the adjusted taxable profit. So in this case, it's the 93,150 of the enhanced relief. You surrender that for a 14.5% tax credit. So it'd give you £13,500 as cash in your pocket for undertaking that development. And you still have round about 50 to 60,000 of losses carried forward. So it helps with the cash flow of funding the development you're doing whilst you're going through it. Thinking then, well, how does it work if it was an RDEC claim, which is slightly less generous? So if we go back to the original example, you've got £100,000 profit. Your qualifying costs in this instance would only be £34,000 instead of the 40,500 because the subcontract costs wouldn't qualify under RDEC. That 34,000 at 13% is 4,400. Effectively, that's added into your taxable profit. So your actual tax liability on the face of it goes from 19,000 to 19,840. You, however, then claim the RDEC credit of 4,420 against that. So it reduces your tax payable down to 15,000. So a tax saving of about just over 3,500, equivalent to roughly 11% of your spend. And it would be the same if you're a loss-making company. Effectively, that 3,500 would become the tax credit that comes back to you. So as you can see, from a cash point of view, it's a very beneficial relief to look at claiming. There's a few admin points just to be aware of. If you've never claimed R&D and it's the first time you're going to do it, you can make use of what the revenue call an advance assurance scheme. So effectively, you can write to them before you submit your first claim in the tax return enclosing it, and get assurance from the revenue that they are happy what you're doing meets the definition of R&D. That's just in principle. It doesn't need to give details of costs or anything like that. It's just the principles of what you're doing qualifies under R&D. For all claims being filed since the 1st of April this year, there's a new tax return form that needs to be completed. The one thing I'd say on that is a lot of the software houses haven't managed to update their software yet because they got told about it so late. So any claims going in now tend to be on paper, and that's likely to be the case for at least another month, which can delay some repayments. When you're looking at preparing reports, the revenue will insist on a report accompanying any R&D claim. The length of that report can be determined generally by the amount of R&D you're looking to claim. But in effect, it has to now cover every project you have undertaken in which you're claiming for. If you're claiming for more than 3 projects on the tax return you're you're submitting and making the claim for, then you only need to give details of the number of projects that account for at least 50% of the amount of the R&D you're claiming. And those project details, as I said, need to address the 4 main points I mentioned earlier, as well as detailing the costs incurred, which can be on a project by project, or it can be on a cumulative basis, however you wish to present it. There is a time limit for making claims. So effectively you have 2 years to make any claim from the end of any accounting period. So strictly speaking, if you've got a 31st of May year end, you would still be in time to make a 31st of May claim, the 31st of May 2019 claim. Admittedly, you've only got, what, 4.5 days left to do it. But it is worth, if you haven't made a claim or ever looked at making a claim, it's worth just revisiting, because it's generally cost you've incurred already, and it's getting that tax relief, which can be very important. And it's worth noting, I would look to get as many claims in as you can at the moment, because there's an ongoing consultation, and Revenue have been consulting on R&D for a number of years now. The latest consultation runs out next month, and it is very likely that that could result in the relief becoming more targeted and restricted, potentially from next year. So it's worth trying to get getting any claims you've got up to date and into the revenue now. So that's a sort of a very quick fly through on R&D, which is a very broad subject. If anyone's got any questions, I am happy to look at answering any, and I'm sure Patrick will think of some.
Yeah. Yes, Jenny, go for it.
I've got a question, please. So I think obviously KTPs would qualify for this, because the business isn't in receipt of aid because they don't receive any cash themselves. We've established that the business will put in £30,000, which would obviously then count towards R&D tax credit. Would the business then be able to account the other part of the KTP, which is the academic time and the access to facilities, that's all paid for by Innovate? It's part of that project, it's delivering that project, but that money, the university bit of the money comes to the university. So the total project will be £100,000 delivering that project, but the business has paid in the 30,000.
No, unfortunately not. It needs to be costs defrayed by the company itself.
Okay.
So where in your example there, you've got the universities actually just paying for the cost and they're being reimbursed by Innovate, it wouldn't qualify. It'd just be the salary element effectively. Okay,
thank you.
And yeah, just picking up on that one point as well. The understanding is that KTPs wouldn't fall into the category of state aid. There's ways of effectively wording the agreement so you fall into certain exemptions.
Okay. You mentioned earlier, Mark, that, or just a minute ago, that HMRC might take a more focused approach in the future. But as we stand now, I mean, are there any industries or business sectors that are currently excluded from, claiming R&D relief?
No, effectively any industry, any business can look to claim R&D. It can be, as I say, a lot of people, when you say R&D, think of blue sky simping, so they think, quite topical is pharmaceutical companies and drug development clearly fall into R&D. But you can equally look at R&D claims, say, on firms of architects. Would be one that people don't necessarily think of, simply, especially if they're working in the environmental energy saving construction techniques and buildings. They would clearly fall into R&D because it's trying to move that industry forward. But no, the revenue aren't targeting any specific areas. I have seen reports of firms looking to make claims on construction firms for adapting to COVID. I would categorically say that's not R&D.
Yeah,
the revenue have come out and said that they would take a very dim view of businesses claiming for something like that.
I mean, is that HMRC getting a bit tougher, do you think, and scrutinising the claims a little bit more, because I always used to have the opinion that if as long as you sort of were fairly reasonable and put together a very detailed report, it would just go through on the nod. But is that a dangerous assumption to have?
Yeah, the revenue in the early days possibly were doing that. They have ramped up the number of inspectors they've got within the R&D team, and all R&D claims now go through one of 5 specific offices. So it is specialists looking at it. It's one of the reasons why they've brought in an additional form on the tax return, so that it's being highlighted more and they're collating the information more. Over the last probably 3 or 4 years, if you tried to submit a claim for R&D without any supporting information, it would immediately be thrown back at you by HMRC and will be queried. Generally, so long as your report is sensible and it addresses the points they're looking for and is clear, tend not. I personally, I've found that we don't get many challenges from HMRC, and they are adopting an approach of they will look at it, and their target time is generally around 28 days to look at it. And if they don't raise any questions, then you can be reasonably confident they're unlikely to raise questions. Whereas previously they did tend to make payments and then it was looked at further down the line.
Yeah. And a couple of quick questions then. Is it just if limited companies that can claim? If you're an unincorporated business, like a sole trader or a partnership, presumably you can't, is that right?
Yeah, unfortunately, the R&D relief only applies to incorporated entities.
Yeah, and something I'm asked a lot is, which perhaps you can give the answer to, is a lot of the smaller companies, it could just be the main director doing the R&D and doing the research and everything else, but he or she is possibly just paid a minimal salary for, remuneration strategy. So, I mean, does his or her kind of salary get included in the calculations, or is it just other employees?
If it is, the director's costs can be included in there, and it could be a reason. Yeah, as you quite rightly allude to, they could be on a very low salary. It could be a reason for looking at a different remuneration strategy in a highly R&D based business, because it increases your R&D cost and therefore offsets some of the costs normally associated with those higher salaries. But unfortunately, it is only salary costs. So if they're paid by dividends, you can't include them. You can't include notional payments. Okay.
And a lot of businesses, perhaps some on the call, might be approached by sort of third-party organisations, so not their accountants or anybody, who are sort of purport to be specialists in R&D. And I've heard that they will take 25% of tax savings and this sort of stuff. I mean, what are the kind of, I know you're probably going to say what you're going to say because you're head of tax in a firm, but is that a kind of good place to go down, really? Because, my feeling with these people is that they'll do the report, stick it in, take the, but they won't necessarily stick around if it doesn't go well, or experience.
There are some good firms out there that do it, and they have got the track record, they say, behind them. There are potentially what I'd call less scrupulous firms out there, and there have been a number of tribunal cases heard recently around similar firms where they do exactly that. They say that you'll be able to claim anything, they'll do a report, they'll put it in for you, and then they disappear. And as soon as it's queried, they're nowhere to be found. And you as the taxpayer are the one that are responsible for that.
Yeah.
So it is always worth pushing back on those.
Okay. Nice to see my Zoom bingo card is almost rogue pet tick. So that's good. I mean, if you can get the cat to sort of trot across the keyboard, that would be even better. But a question for you then, Jenny. One of our questions on the registration, and the second part of this chat, James's question: where does one find short to medium term funding to bridge the gap between an established business and an incomer who doesn't possess the capital assets? I know we're not sort of expecting a detailed answer, but we were discussing this earlier, and you were sort of saying you might refer them to someone else, but sort of over to you.
Yeah, I think in terms of sort of startup businesses or new businesses looking for funding, if that's what that's asking for, that's really tricky, because a lot of the funding environment at the moment is heavily based on delivering economic outputs. So deliver jobs, deliver GVA, deliver this, deliver that. And actually, if you're in that developmental stage, it can be a lot more difficult. I think for some of these early startup businesses, it's worth looking. I mean, certainly at the University of Plymouth, we have something called an R&D Solutions Fund, which is where we can work with businesses and academics. I think it's worth looking for, you know, some, maybe not through the big government programs, but looking at university programs and seeing if there's anything there where we can help you or help businesses in terms of bridging that bit between, you know, an established business and a business sort of looking to get going. But it is really difficult. I mean, again, a lot of universities will have sort of formation zone space or startup space, so businesses want to come in and sort of work within an R&D environment. Quite often you can do that as well, and that's a good way to start to get a feel for how you can sort of develop your products and your processes and, you know, bring your business forward. But it is difficult. I think it's something that we would hope that the government would start to look at, because I think, you know, particularly, you know, we've had the financial crash, then we had Brexit, and now we've had COVID. Everything's been sort of over the last 10 years just trying to prop up what's already there. And at some point we can start to look a little bit more, you know, a little bit more intelligently about how we bring forward the businesses of the future as well.
Thanks. Okay, I think don't think we've got any more questions, so I'd like to wrap things up at this point. If you do have any questions after we finished, as I say, you know, you can just use our standard email address of events@thomaswestcott.co.uk, and obviously our panelists will address your questions. I mentioned it earlier, if you fancy a change of tack in your life and want to become like myself or Mark, and learn about a career in accountancy, then we've got a webinar tomorrow at 2 o'clock, which you still can register for, and that features our head of HR, Simon Irvin. The downside of that is I'm hosting it, so but you can't have everything. But and so finally, I'd just like to thank our speakers today, Jenny and Mark. You know, a couple of great presentations, and hopefully very useful for you. I'd also like to thank our attendees. Oh, actually, we just got one question before we go. So the question is, does KTP pay for consumables and equipment? And if yes, it does, could that count as an R&D tax or part of the R&D tax credit?
I'll let Mark answer the second part.
The second bit,
does it
yes.
qualify as R&D? And I'm just going to message one of my colleagues who will be able to tell me categorically before I give an incorrect answer, like I thought Red Paddle was in Cornwall. So let's get this correct.
All right, well, Mark, do you want to go for the second bit then?
If the answer on the first part is that the KTP would essentially reimburse the company for any consumables and equipment costs, then yes, in principle, it would still qualify then for an R&D. It would be under the RDEC because it would be essentially a subsidised cost that you're incurring. But yeah, there'd be no reasons why it wouldn't qualify as an RDEC cost.
Okay.
I mean, I think it probably could pay for equipment. I'm just waiting for my colleague to get back to me, but you think you probably need to increase your contribution towards the costs. So it's, you know, you can pay more. It doesn't have to be 30,000, but you know, there might be that you've got to put a little bit more into it. But if I don't get an answer, are you happy for me to get an answer back to you? And Alex will probably know who that person answering the question was, and we can,
yeah, that's fine. We can respond to it after the call.
Can I just very quickly pick up on another question that I think came through, and I don't know whether I misunderstood the question you asked, but it was I know we thought that there was going to be a question around intellectual property and where KTPs might sit in terms of university intellectual property, and is there a risk that, you know, the university might try and hoover up all the intellectual property. Can I just put every business's mind at risk and at rest,
yes, rather, they will.
and that's not at risk, at rest. And no, I've spoken to a colleague about this, and he's made it very clear that the company will own any IP, because the idea is your idea. We're just helping you develop your idea. So there's no risk of IP. If as a result of it, a new idea comes out and we co-develop it, then we would look at that. But certainly in terms of the actual KTP idea, the IP all sits with the business. And my colleague has very helpfully come back to me, and yes, you can get 2,000 per year.
There you go. So hopefully that answers the question for you. There aren't any others, so that rather neatly actually brings us up to exactly 3 o'clock. So that's our allotted time. So yeah, so thank you to our attendees, thank you to our speakers. Might see some of you tomorrow on the call on careers, accountancy careers. So have a great rest of the week, and as ever, stay safe, Devon and Somerset. Cheers for now. Bye.